Good day, guys. Welcome back to today's trading session. Let me make sure I'm live and ready to go here. Let me know in the chat if you guys can hear me okay. Let's go there. Alrighty. Okay. All right, let's see what we've got here. All right, so obviously we on the contract rollover today. Let's go back to an hour quickly just to show you guys. Not jumping into any trades, FOMC tomorrow, so obviously we're still in this bad consolidation here. Obviously I think this is still liquidity that we can would want to go and take up there, or we just broke 3 equal highs up here and there's a little volume imbalance. So obviously depends on what this candle is going to do right now. We're going to close lower to come down, equal lows here, and then obviously there's more liquidity all the way down here. And that's where I think we will go to. I don't know if we're going to do it today. It's quite far, but I think over time I'm still pretty much bearish. But for now, let's just trade what's in front of us today and yeah, take it from there. All right, let's see. Okay, the market just opened. Let's go to a 1 minute there so everybody can see it. Big long spike. I think for me, what's important on this open is obviously the 1 hour and the 15 minute. So 15 minute is something that's of importance to me right now, and if we want to go higher, I'm going to keep an eye on this Beverly gap here. As you can see, we nicely spike into it, so maybe we want to go higher. But yeah, let's just keep. Don't rush into things, guys. Let's just keep an eye on it and see. This thing could still come down and close below it to go lower. But yeah. All right. Anybody got questions? Feel free to pop them in the chat, and yes, I'll be happy to answer it or to go through certain things. Hopefully, there's a setup for us today. If not, I might take some scalps. 10-point scalps. Like maybe a 10-pointer here. That's going to be around there. Okay. Just to get the day going. Okay, 10 points done and off to the races. All right, so that was a quick 10-pointer there. I did take a short here earlier, up $2,500 or $2,300 for today. So we did 640 just now. Nothing spectacular about that trade. I just have a separate system that helps me scalp the market or look for scalps, and that's basically what I've done there. Okay. Looks like there's some nice momentum to the upside here. I mean, looking at 1 minute. But let's be patient. Sorry guys, I just need to check that everything is right on my side. Testing. Right, so that works fine on my side, so I'm happy with that. Just give me a second here, guys. Okay. Right, so let's have a look. I can see some people's asking for equal highs. So let me go to a 1 hour. Sometimes it's easier to see this on. So I marked this equal highs or these highs out, and I'll show you guys why. So we did ran through it slightly, but we still got this, so we could potentially mark out this high up here. The reason is this high is still untapped. This high did take something there, but I mean, I do believe there's some liquidity up here, and also if you look on the left, there's this nice fair value gap open here, so it's not fully closed. So that's why I think we might want to go up there. Guys, there is one thing I can tell you guys what I've done, and obviously has changed my life from a trading perspective. If you find liquidity, say this was equal lows here and this was equal highs, if you try to trade between the two liquidity points in the middle from to the one and then come down, I've lost more money try to trade between two liquidity pools in the middle, then sit on my hands, wait for the market to go to one side of that liquidity and trade away from it to the other side. And we've seen it so many times when you look at high resistance liquidity, when you see price. I've seen it many times, and I'm sure you guys did too, where the market would go to a liquidity point, and just before it runs, it turns around and go the opposite direction. I've lost accounts, I've lost money, I've broke even. It's not worth it. That's why I always tell people, if you can find equal highs and equal lows, like now, I think there's liquidity up here, there's equal lows down here. Rather wait, if you bearish like I am now, rather wait for the market to go somewhere and reject from a liquidity point, then trade to the other side. Because what's happening right now, we've got market, making a high, a low, a lower high, lower, low, lower high, lower, low, lower high, and then it turned around. Now all these swing points are all liquidity. And that's why we see this up move now, taking liquidity, and maybe go up as far as up here to take liquidity. But at the same time, we now leaving this point, these equal lows, this swing point after the gap overnight. That's all new liquidity. It's building up. So if you're going to sit on your hands trying to take a trade up here and then trade it down, your risk reward is going to be much higher. You're going to wait for one trade, try to trade in between. Now, you guys will see I do trade from time to time, like I just take a scalp. I've got a different system for that. I don't advise you to just blindly trade it. I just trade momentum through that, and but then I try to take 10 points and 20 or whatever the case is, unless there's certain elements that tells me it's so bullish that it's worth taking the risk, to take it to one side. But if you're not sure, rather just sit and wait for market to run liquidity and then give you a setup where it rejects or turn around, and then you can get a very nice trade to the opposite side. All right, so let's go back. I'll see where we are here. Okay, 25,150. 25,150. Sorry, I'm going to have to jump around if there's any other levels you guys want me to check. 150. I don't see any. The only thing I can see here, I don't see equal highs there. But this could be a level, 50% of this week here. But I'm not gonna look at that right now. I think my biggest thing right now is going to be to see how this 15-minute candle closes, and I think we can see it's most likely going to close bullish. Something that I also trade, but you got to trade it in the right context. So I'm not going to tell you guys to just trade it. I like to look for a fair value gap like this, break in structure there, and this is a outside bar. It wicks through the low of this prior bar and it closes above the high of that. Now you can either then just trade it when it closes to go higher, or you can wait for a retest of this wick and then try to take a long in that direction. But it's got to be done in the right context. You can't just take it randomly. Okay, so I'm on 15 minutes here, and someone says there's equal highs. Sorry, I don't see it. Maybe it's because of a different contract. I'm on the rolling contract, so I'm not on the June contract. So maybe it's different. Let's see. Okay. Yes, that looks like liquidity. I'm going to stick to the rolling contract. I enjoy trading off the rolling contract. Don't like to jump between them, but yes, if that's equal highs, then obviously that's liquidity for you to trade if you want. All right, so what do we have right now? So we've got a target up here. We've got some sort of consolidation, a spike down, which is your manipulation extension, consolidating. So if you want to be bullish, I would mark out this fair value gap and look for price to, we can trade it and take it from there. We've got about, I think, 3 minutes or 2.5 minutes left. But maybe this is worth a try. Let's just do it properly. So this could potentially come all the way down here. The reason I take it down here is 50% is right at the bottom of this fair value gap, this blue fair value gap here. Let's just mark it out. I mean, this entry could change if this candle go higher and then come back down. Obviously, a stop would be down here. But let's see. Alright, let's see. Let's keep an eye on this. MNQM. All right, let's see. This swing point here, guys, if we break below this, close below this fair value gap, I'm most probably just going to close the trade if I get picked up there. Normally what I would do is I would wait for price to come in here, do a rejection, and then try to enter. But just to show you know, the structure here, consolidation, so I'm expecting some sort of manipulation to expand, and only because we're expanding from here. And if you go onto the 15-minute, you'll see it's a nice outside bar, and that ties back in. This is your wick for price to come back into that wick, and then try to you know, buy from there. Just to keep an eye here to see this is right on top of that wick. Just put it there by the wick. See, sometimes it doesn't even come in, you know, it'll just run away without you. Then it's one of those things, nothing to worry about. Okay. Okay, well, let's see if we're going to get that pullback. Maybe not. Would have been a nice trade though if we were picked up down here. I mean, like here. Also, what we could mark out there is some equal lows here as well. Alright, so I'm actually going to take this volume imbalance off that. So let's just have a look here quick. This is your 15 minutes. As you can see, nice outside board. Would it be nice to see a pullback in here? Maybe we still get it. Now that 50% is right on top of that fair value gap, so maybe that's what it wants to do. So got to be flexible with the market here. Okay, so there's equal lows here. This is one of the best magnets you'll ever find, is when you get a fair value gap open like this, not filled, and equal lows or equal highs forms on top or on the bottom. Market will at some point spike to it. If we run higher here and we get some sort of a turnaround in price, that will most definitely be a nice target. Now there's sort of consolidation forming here, consolidating, expansion, consolidate, expansion. This is all creating liquidity. And because we are, just want to take this off, because we are looking at lower prices at some point, and just want to go to a daily to show you guys. We're still stuck in this big consolidation here. I know we spiked below that, but we didn't go lower. And just here we spiked off it. So we might see price run up here or maybe up in here and then come down. But we're still stuck in this consolidation and FOMC tomorrow. So that might be the catalyst to drive price in a direction. But for now, I'm still bearish. And the reason I'm bearish is this swing or this range here. If we break this high, I will look for longs. But we broke lower, we came to equilibrium, sell off. Below equilibrium, buy, sell, deep, buy, back up here. So this equal highs that I've marked out here, it's above the 50%, which makes it, I mean, we could even do that to use this bottom here, but it doesn't matter. The bottom line is it's above the 50% of the range, and that's in a deep premium. So I would look for shorts up here. If we don't get any shorts and we break higher, then obviously it's fine. Then, yeah, analysis is wrong, and we might go higher. The only reason I'm bearish is structure is bearish for me at this point, one, and two, it's seasonal for Nasdaq to sell off this time of year on, you know, March, April, and then turn around to go higher late in the year, mid to late in the year. Anyone take any trades yet? That pullback on that wick, 50% right there. That's a nice one. And then close above. It's obviously bullish, and that's why I took a quick long there. But obviously I only took it up here for a quick 10 points. I mean, could hold it for longer, but because I'm bearish, it's quite risky to take longs. I know the structure is bullish here, but yeah, so we'll just keep an eye on it. Right, we'll see how price goes here. If it wants to go lower, or if it's just going to bounce from here. Maybe there's in for another 10 points. Let's see if I can do 10 points here. 10 points is about there. Let's see if we can get that high at least. Give us about 600 bucks. Let's see. The right thing to do is once you've taken a low, wait for a new swing high to form. So what you want to see here then is, you know, an up candle close above that. That becomes your protected swing. There's a protected swing here. I can't put my stop there. But hey, if I get stopped here, then it's one of those things. And we can do that. It's not the best risk reward. Okay, so let's see if this low can hold. Or do we want to go create a lower, there's a lower low. Let's see if we can close above these black candles. Alright, so we're out of that trade. I want to get the follow through to the upside. But these black candles are still in play. We took a swing point out here, so we could see a price go up higher, or maybe we want to go down here first to run higher. See, this is where that 50% of this bigger range up. So let's see if we're gonna drop to these equal lows. Obviously no financial advice here. This is a paper trade account. I said yesterday I'm not going to trade any live funds this week. And yeah, so this is basically just to read price. I mean, it's easy for me to explain it to you guys, but it's easier if I put a paper trade on to see you guys when I decide like anything below here, I'm wrong. So obviously I don't want to drag the drawdown out all the way to down here, but it's just one of those things. And the only reason I took it here was this range up, consolidation, you know, manipulation down. It's actually no swing low here. Looks like momentum going up. Take a trade. Okay, so it stopped me out. It's fine. Maybe we want to go down here now. So we'll see how price behave down here at this fair value gap. And maybe there's a trade there to go higher. And then, yeah, we'll have to play it by ear. we could see some sort of a zigzag down, 1, 2, then maybe a 3 into here, and then gives, builds liquidity that way to take us higher again. Would I short here? No, I wouldn't. The structure is still bullish. Break higher, protected low, consolidation, break higher. I mean, I'm not going to say this is protected lows because there was no liquidity rate. This is also consolidation. So we might see a bigger liquidity rate into this lows before we extend long, higher. So it'll, a bit risky for me to take a short or even a long, yeah. So not really. So basically what I'm saying there is let's just wait for something that shows up better, and because now we're just guessing. So let's see how price reacts down here, and then I most probably would look at, I'm going to take this one off because there's a white candle, can't look at that now, so I'm going to look down here. Let's see. I mean, people would look at this, maybe inverted fair value gap and try to short it here. But what you must remember is you've got liquidity here. Okay, there's a magnet to take price down. But just be careful that price don't go down. You short here and then it turns around, stops you out. So you're pretty much stuck. So let's just give it some time. Like we said, zigzag, down, up, down, up, down. Because of the structure down, big black candle, you could short, this is all scalps. Take a short here and try to take profit down at this equal lows. Then obviously you can have your stop above there. This is only a scalp trade, chat. This is not me thinking this is the short we should take all the way down. Okay, body close below the middle of that fair value gap is going to be key for me. Don't like that we close above it. But let's see what this candle does here. I want to see price close below these white candles to target this low, and obviously these equal lows. Okay, so we've got all this liquidity building up here. I'm just hoping we're going to get that move down here first before we target this liquidity up here, and not from here. Price seems stuck in that fair value gap right now. Let's see if we can get that pushed down here. Come on. I mean, if we take this just to measure it, we could get 1,300. That's on the 50%, so let's see if we can get it. I'm gonna soon bring my stop in. But it's important for us now to close below here and close below this. But then we're at the target, so. Right, let's see. We below those white candles, so very good chance that we can see a spike down into these equal lows. Hopefully it triggers my take profit, which is at that 50%, and maybe come down to this fair value gap 50% before it wants to do something different. Okay, so there we down there, just reduce my stop there a bit. There we go, it's done. $1,300 on that one. Now we lost $900 on the other scalp, but we're still up to 7 for the day. So I'm not going to take a trade in here because obviously we don't know what the idea is here. It's liquidity up here. So this trade played out. It's key for us to understand what's going to happen here. So I'm going to look at something here. So this is the first presented fair value gap. And I think we'll call it as such. First fair value gap. And maybe we make it purple. So everybody knows that's the first fair value gap. So if we close below this, then obviously there's opportunity that will go to these equal lows down here. Let's see. So just so you all know, chat is there wasn't. So obviously, I've got a very specific way to enter trades, and it's not the scalping method that I'm using here right now. So I haven't seen a nice setup at 9:30. Maybe if we bounce here, one can argue that this was a good entry, but my stop will be down here. The only reason I'm not taking this trade is this equal lows down here. And I don't know what price wants to do here, so I'm not just going to blindly take it. And then obviously we've got a level up here. I just don't know how strong that level is. And yeah, that's probably better for us to just wait a bit and see. I mean, one thing you can take from this is these equal lows. We close below it, create a fair value gap just above it. We literally spike into it. So now I want to see what price does. Does it aggressively move back up, or does it actually close below this first fair value gap? Then this might be a signature for us that we want to go lower into these levels here. Okay, so now we're starting to get like a bearish type of reaction. Okay, let's see how it closes. Just want to go look at the hourly. All right. So we'll hop back here now. I mean, from an hourly perspective, we've taken some liquidity out here, which is fine. If this candle closes aggressively down, or even down here, which is below the gap, which can take a while, I mean, that would send price lower. But that's on the hourly. Always try to trade with the hourly. Okay, so that's 15 minutes. 15 minutes, back candle, invert this 15-minute fair value gap. Now we're under 1 minute, so maybe, okay, we haven't closed below it yet on the 1 minute. See, price hasn't closed below this fair value gap. So now the opportunity is not to take a trade. I mean, we want to see, are we going to reject something here? There's a little fair value gap here. If we go from there and close below it, okay, so maybe then we want to go lower. But because we haven't closed here, I want to see if we want to close back above to go maybe higher and then come back down later. But this looks pretty bearish right now. Let's try a little short on the pullback. Take profit. Let's put it down here. Stop loss above there. Hey, this is the protected high here. Okay, so that's probably gonna tap me out. Okay, and now it's most probably gonna, let's see. Only reason I took this one is it was an outside bar breaking, structure here. This little wick here did not take any swing points out. Yeah, with this equal lows here, would have been a good trade, breaking inverse this fair value gap to actually come back, test this, and then just drop. But it is what it is. Now we're getting close to this little gap here. Let's see if it's going to break. Okay, so it broke that, so maybe we want to go to this liquidity now. Okay, so we broke through this little gap here, break structure, aggressive pump down, aggressive pump up, and this could definitely be a nice long setup because we're testing this to take liquidity out here. Let's see if we can get the momentum want to continue back down, yeah. Just keep an eye on this. I'm not buying anything yet. I'm trying to gauge this momentum. Yeah. If momentum's pushing higher here, then I'm most probably going to target these highs here. And if we're going to close above these highs here, then I'm most probably going to try long here. Okay, let's win it. And let's see if we can get this trade up there. Okay, so we're looking at this trade. This momentum looks like it behind it on this consolidation, but we've zigzagged down through this fair value gap. Aggressive move, aggressive pullback, close above the structure here, consolidate. It might want to go back test this fair value gap, and then rally up a bit here. So I'm going for a home run here. I'm trying to see if we can try to challenge these highs. Pretty stuck there right now. But let's see. So I would like to believe this is protected for now. This low here. and we broke the structure here. Boom. I mean, we could test back in here. Let's just mark it to 50%. It's all the way to 50% of this fair value gap. I mean, I could have waited for some pullback here. Pretty much stuck there. See if we can break through it. Break through this high here, then all this liquidity is waiting. Gosh, price is just refusing. Let's see. Come on, I know you want to pump higher. Okay, let's look at the 15 minute here. See, 15 minutes rallied up, came down, ran the lows and close. Yeah, let's see if we can get up there. I mean, how much time is left? 2 minutes on this 15 minutes. So a good thing is this price action is either going to prove me wrong in the next 2 minutes or it's going to run higher. Okay. Right, so if this can just close like this, again, this is an outside bar out of consolidation with a bullish target here. So, yeah, but I need this candle to close first. No, don't close below that. Oh. It is painful. Alright, we'll just have to wait and see. This outside bar should have closed above this swing point, which it didn't, as you guys can see. For this low to hold, it did break this high, so I want to say the swing low here could be protected in a way, but we could run it first before we turn around. So I mean, these are all the scenarios that you, in the reality of trading, it's always good to wait for price to, run a liquidity point, which is a swing point, and then move higher, break structures and all of that. Then it's a more, I mean, look at this. Yeah, there's a swing low there. We ran it and we close above that swing point there. That's a break of structure, and then off we went. So we just have to see what price I want to do here. Like I said yesterday as well, guys, FOMC week is normally not a good week for me trading statistically. Not all the time, and that's why I don't trade real money on FOMC week. And especially with the contract rollover, I end up most of the time finish off the week in red. So it's good to know when's your good weeks and when's your bad weeks. And yeah, then it's easy to stay out of trouble. All right, so now what we want to see is what is price doing here. Is it going to bounce back up? Okay. Okay, so now if we're going to close like this, so that's a good reaction. Like we said, swing point run, and now you want to see a push higher. Close above these black candles would be key, and break of structure would be above that high. If we close above these black candles, it will become protected. If we break structure, still protected. So let's see if this is going to be the low that's going to keep us in the game. It's in a fair value gap here, taking out the low. So that's the type of trade you want to take. Okay, so this is now protected low. So it's a swing point. Now the key is to see price not violating this low, but actually bounce up from here. Dun, dun, dun. Okay, let's see how this one closes. Okay, that's a good move there. Just want to see where we are with. All right, so we closed above these black candles, which is good. We could see, just rally up or a little bit of a pullback. It'd be good if we can just close above this break of structure. A bit of ugly price action here, but we managed to read something out of that. Alright, so eventually we close above this, and now we can bounce into that black candle and then use that as support as like a order block or something to send price higher. Why this black candle is a good candle? So we've got 3 or these consecutive down candles around liquidity, broke above it, tested with that black candle and then sent price higher, breaking structure, now testing it again and should send price higher up. I mean, this on its own is a strategy that you can trade by yourself under the right conditions, of course. If price is struggling to go or to move, then obviously could be problematic from time to time, like now. I think we're going to get to that top side, but I think it's going to be sideways crap till we get there. Right, so what do we want? We want to see this high get taken out. We want to see this low holds. We take this one out. I mean, we deep discount on that little range, but seems like it's got obviously some other plans here. Which I guess is one of those things. And what I'm looking for here is looking at this 50%. That's right on top of this first fair value gap. So let's see if that wants to hold price. I mean, big candles like this, you got to protect it low, will scare most people. But can it stop you out? Of course it can. Can it turn on a dime and make you profitable? Most definitely it will. And I've seen it many times. And if you trade your strategy, you'll be comfortable with leaving your stop there. Don't get anxious. If it stops you out, it's one of those things. And the other thing is it's a paper trade account, so not much of a hassle if it stops you out. But even if you trade real money, the same emotion will apply. Should apply. Pretty stuck in a range. Obviously won't take any further trades after this because it's just not moving. There's liquidity on both sides, but for some reason it's just holding price. might get stopped out and run lower again. Yeah, it's just weird because we didn't even take liquidity out up here. Again, this is what you see. You go into consolidation, making higher highs, lower lows, higher highs, lower lows. This is just seek and destroy, taking people out at long, people out at short. And there we go, we're out of that trade. And this is one of those where price is just expanding. And it is just seek and destroy, taking people out. So, and now it might go to the other side again. So it's not contracting. Contracting is the opposite, where it makes lower highs and higher lows. This is the opposite. Make people believe there's liquidity, which there is, and break out there, take them out, break out there, take them out, and vice versa. People taking breakouts down here to go lower just get stopped. Breakout could get stopped up there. And those are the trades where I won't trade weeks like this. This is the characteristics of FOMC and all of that. So, and on top of it, it's contract rollover. And I'm not blaming any other circumstances, but on any other day, if these trades present itself, I would take it. And I guess the key is to know when to sit on the side and know when to actually risk real capital. Right, so what else do we have here? Nothing much. Nothing's happening. There's no trades. The only real trade that was good was this setup down here. But still not a great setup. And getting that momentum. But then we all got stuck here. So I'm not going to worry too much about it. Like we said, we're on the lows and then we go back to the highs. Up and down, up and down. Probably go for these. Now that I stopped trading, maybe he's going to go for these liquidities now. But that's fine. It's getting close to my stop time of trading, which is 15 minutes from now. And I think it's best to wait. Tomorrow's FOMC, so tomorrow's one of those days where you just read price to get better at it, and obviously not to risk any capital. Chat, I will obviously stream live tomorrow, and maybe what we'll do is I'll have a look, maybe stream the FOMC, which is in the afternoon, but I'll see now the momentum to the upside looks good again. But I'm not taking further trades. And the only reason I'm not taking any trades, it's because it's close to my off time, and we've basically said this is not the condition you want to trade in. So why would I now risk any trades? This was a IFVG right there, with a stop there, and break even up here. So maybe it plays out, maybe it don't. Who knows? I don't care. I'm done. And I think tomorrow is going to be a better, not a better day. It's going to be FOMC day. So be careful. And I'm sure once we're done with this week, I was expecting maybe better price action today, but obviously not. So now we just have to set it out. Maybe there's a good one tomorrow. I mean, it's one of those things I can't tell in advance. On the daily time frames, we're still stuck in that big range. And for us to see much better price action, we need to break out of that range. Not by a wick or anything, but a proper breakout to find direction, whether it's short or long. Doesn't matter. It would be good if it's going down, because then it's going to be a lot of liquidity and context for us to take longs and obviously capitalize from that. Let's see. All right, so I think what I'm going to do, I'm going to actually stop the stream here. There's nothing much happening. Thanks for joining today. And yeah, thanks for, hopefully you learned something the way we read price. And if you took any trades and made some money, good for you. But like we said, it's not financial advice, and this is obviously paper trade educational stream. So thanks for your time. Thanks for joining, and I'll see you guys tomorrow. Thanks. Bye-bye.